How about now? Are we getting sound now? This is sound check again, folks. Are we getting sound? Okay, cool. Yeah, we'll get going here in just a minute. Yeah, so just in case you were confused, I did change the market review Q&A. So are we still seeing 1080p? I'm getting strange. Getting strange errors over here on YouTube. Boy, they screwed up the studio. They changed a whole bunch of stuff and it's just not working right. Yeah, who needs hockey anyway? Okay, awesome. All right, guys. I am going to do something new today. I'm actually going to come on screen. So this will be an opportunity, not that you don't see me enough in my videos, but I always hate the talking screen like we've been doing for a while. And we're working on raising changing the format that we're doing these videos on. And this is interesting. It's a different view than you see me on the videos. It usually the camera's actually behind me. And so anyway, yesterday's action, it was interesting, I think, how emotional a lot of folks got yesterday. I did do a quick live stream about 10 minutes before the close yesterday. Yeah, I have lots of green screens. I just didn't put it up, so I'm being a little lazy today. So, but anyway, yeah, yesterday, when I came up and did the live stream yesterday, really what I was doing is just trying to cover. I knew it felt very emotional. We had some great conversations on the Wave Tech training yesterday about things, and it just felt so emotional. I mean, markets went up last week every day. There wasn't even a downtick hardly. And you know, then we see a little bit of a downtick and everybody got all emotional. As I made the comment yesterday, I did not see this as being material. When I did my homework last night, looked at everything, it was not at all, there was nothing changed. And I mentioned that even on the fly yesterday. And that's actually, I guess, why it felt emotional, because everybody's so nervous at these highs. And I captured something on my phone. I'm going to put it on Twitter. But you know, this market, when you condense the ranges and condense the scale, it's a perfect V. Now, what's not a V is the economy, and the economy is, I don't know what it is. It's hard to tell what it is. Here in Arizona, no one seems to give a shit. They're out doing whatever they're doing, and you know, if you watch national media, you would think this place was a nightmare, and it's anything but that. In fact, everybody's out doing stuff, and Jay's down in the valley, I'm up in the mountains, so we have a different feel, but he tells me pretty much the same thing on that level. So the bottom line is, we live right now in this very emotional world. And just about anything is a trigger, it seems to be. You know, and then yesterday there was a bunch of things, and I'm going to talk a bit about today. I'm going to talk about the interest rate movement. It's continuing today. The 10-year is continuing to move higher, and I think this is material, but it's not a surprise to me. It seems to be a surprise to a lot of folks, and you know, we'll go through metals, and we'll hit Tesla and a bunch of stocks here shortly. But you know, I think I want to usually start off on the front end of this live stream, just talking to you about general viewpoint and things that I don't get to talk about in I call them 10 to 12 minute videos. The last several days they've been between 19 and 20. I think I covered 5 markets last night. There's just so much going on. You know, there's sometimes when I start the videos, I just want to go and do like 20 markets. There's plenty of stuff that could be covered, and I try to cover them fairly quick and get to the point. But I think most of the comments I made in the metals in the YouTube, in the YouTube video that I put out last night seemed to be pretty spot on. The metals did rebound. I don't know if anybody was able to capture any of that rebound or not. It was pretty quick. Most of it happened overnight, it looks like. So we'll take a look at everything. Yeah, so only about 20. So you folks want a bigger view? I'll make it bigger for you. How's that? Is that better? You get a full view of me on the screen. So we can do that. But the general feel of everything that's going on in the market is just the underlying bid is there. As I've talked about, we'll go through all the details here in a minute. I'll go off screen and we'll dig into the technicals. But as we go through all of this stuff, nothing's changed. Nothing changed from a 1 hour sell-off. You see we're right back. We actually printed a higher high today than we did yesterday. And the market somewhat struggling up here, but I think it's setting up to take out this 93 number. This 33.93 number is going to get taken out. It's just too easy of a trade, right? There's just certain things that have to happen. And with the NASDAQ and most of the tech stocks rebounding today, you know, that's going to be, that will be, I think the key element is that everything just kind of came right back in. And materially nothing changed, you know. I don't think that Joe Biden, we'll do air quotes, Joe Biden announcing his running mate was a big deal. I'm not sure. You have to remember that the news media has a lot of clickbait they've got to do, and that's going to be important for us to pay attention. And they're always creating this emotion, and you know, so I'm not sure that's anything material. I think as we get, this is, you know, August, as we get into September and maybe into October, then maybe you can feel like this is different. You have to admit this is probably the most unique presidential election cycle we've ever seen in our life. Now, I've been around a little longer than some of you, but I've never seen anything like this. Nobody has. And, you know, no debates. There's nothing. I mean, all you got is a few political ads, and that's it. And the only difference with Trump, he's on TV doing news conferences because he's the president. So I don't know exactly how this thing all plays out. You know, I was probably like a lot of you folks. I was disappointed that college football got canceled. What a shame. I'm a big fan, and usually a fan of anyone that beats Alabama. So I became a Clemson fan a couple years ago. But anyway, the markets themselves are going to stay positive. There's nothing going to roll them over at the moment. Everything that's coming at us right now, we know what's coming at us. The earnings are finishing this week. We're going to be looking at very low level economic reports this week. Maybe tomorrow morning's report on unemployment claims and the continuing claims. I've been focused on that. I mentioned if they get below 16 million, that's going to be a positive. And it just looks like everything's going to continue to go forward right now. And the Fed's still there. Nothing's changed. So there's going to have to be something abrupt changing. News media, you know, keeps telling us how bad everything is and the coronavirus and all that. Is it spreading, or are we just more aware of it? I don't know. I'm not a doctor. I don't claim to be, but it appears that that element's out there, but no one seems to care anymore. And markets are really funny, as they pick and choose what they listen to. And right now we're into just about all news is good news kind of thing. So even if it's negative, it doesn't matter, or it's somehow spun to be positive. So let's go ahead and dig into the charts here. I want to cover a couple things on the S&P. Then I'm going to go through the interest rates, which I think are going to be key for us going forward. We'll talk a bit about the leadership changes that I see coming into the markets. We get these little shifts from day to day. And when I get off camera, I can read the timeline. I can get a better feel for what you guys are doing. So we'll go ahead and get ready to go. We'll go to the charts here. So starting off with the INX, and someone did point out that the market grid numbers did not make it on the and that was unfortunate. I got really busy and just forgot to put them up. So we're working on getting these things automated so they're out there, and there doesn't have to be what I call the man in the middle. But looking at the S&P 500, what we're looking at here is we've went above the RXT number, 3369. And those of you who watch the channel, if you watched the video on how to use the market grid, this is, I won't call it dangerous, but it certainly is cautionary that if we close above 3369 today, that's going to signal another 2 to 3 day sideways price action, which would set us up for kind of muting out the rest of this week. So we'll have to watch that real closely. I'll talk about it on the nightly video in the commentary. But the bottom line is this thing is still showing an acceleration. We got PPM1. The PPMs are price pressure momentum. For those of you who are new to the stream, this stands for, that gives us an idea of angle of attack. Right now, PPM1, which is the shortest term moving average, which I use a 10-day moving average, and it's simple, is a 0.36, 0.26, and 0.20. So we're in trend mode. Anything above 0.25 is trend mode, which also tells us below that, those moving averages, right now 33, make sure I've got the right number, 33.22 is the moving average, and that's telling us that there's less than a 40% probability to decline below that level. So there's and this is what I brought up last night. There was a cluster of numbers here. You'll notice that S2 on the cash, 33.15. The low, since we gapped higher, didn't even get close to that. We didn't even get an S1 out of today. Overnight on the futures, we saw a much different situation. Let me flip over to the futures for a minute, and you'll see that on the futures, we did print down to 26. S1 was 21. We never got there, but we have taken out 3367.75 is RXT on the futures, and we're the high 77, last is 74. So we're trying to get back above that extreme number, which would be a slight negative if we close above there. It doesn't mean that there's a top or anything like that. It would just suggest that there's going to be some sideways movement. So it gives you an opportunity, depending on what type of trader you are, to go in there and maybe take the other side up at these higher levels. And, but right now we're outside of the grid, and it feels, at least from my viewpoint, since I live in on the grid that it is, when I'm outside of that, I'm somewhat cautious. The only thing that you can do is actually start to go over and look at hourly graphs and things of that sort, trying to find some sort of reversal or a top. And I just put the hourly up on the futures, and you see that last hour sell-off we had yesterday, and then we just kind of ground higher. And I'm not ready to talk a lot about this today because I think it'll be distracting. I want to get through this part and get into doing individual stocks and talking about the stuff that you folks want to hear that you don't get to usually hear me talk about. That's kind of the whole theme of these live streams. But I do want to talk a little bit more about the market configuration. But I revealed something, and I promise you that very soon I will bring you in. There's a chart that, and I mentioned a term, a dragon formation. Well, I've got a whole bunch of new formations. These are stuff I made up. They're not out there. It's not the Golden Cross. It's not anything. This is stuff from my work, and I will bring you into that world, because one of the things I do want to do is talk about day trading and pattern trading and some things that I also do that you folks have not been exposed to. You have to remember, I've been doing this for 40 years, and I've lived in a bubble. And by that, I mean, I don't read books. I don't do probably a lot of stuff that you folks do. I'm not very diverse in my thought process. I've been doing the same thing with a lot of the indicators I have. The PPMs were actually developed between 1983 and 1984, and I never stopped using them. They just worked. And when I developed them, they actually were developed with a client and ended up being an associate of mine. And back in 1990, when we did our first software program, and it was funny. Matter of fact, let me see here. Let me go back. I'm going to come back on screen here for a minute. But this right here was our first software program called Market Mind. This is the user manual. It was 1993 copyright. Anyway, so been doing these indicators that I'm talking about here have been part of my staple for virtually ever, okay, in my life. And that has been what's come from this. And I suggest those of you that are starting to trade, doing these things, when you find something that works, it has a context for you, stick with it. And that's really important. I'm teaching you a lot of my techniques and things. I've never exposed my work at this level ever before, and this has been important. So the trends aren't going anywhere. We're going to flop over to a weekly chart real quick. We're going to do two things. I'm going to go back to the cash market and then go to weekly. And weekly is getting close. R2 weekly, 33.87.28. If we're getting closer to that 83.21 high today. My guess is that we're going to get some positive news out of the employment situation from claims or the continuing claims dropping underneath there. And yeah, I'd have to agree with Jonathan. Smash the like button if you're on the channel. It helps a lot. Really appreciate it. But these patterns that are unfolding here are still accelerating. You'll notice PPM1. Let me draw some things in on here, and then we'll get into and speed the show up from the standpoint of content and everything that we're going to be doing. But let's bring in this. This is important. This upward slope of the market grid, and I'll tease you a little bit. I'll take these lines off here in a minute, but this is a potential dragon formation. And dragon's not necessarily good. It does suggest that we are climbing into a point where the markets are going to see a high. And I talked about one of the most important things, in my opinion, that we're going to see from this pattern is when, I believe it's a when, we print an all-time new high, how the market responds there. Do we see a reversal? Do we see follow through? And I'll talk about just looking at the weekly market grid, there's two numbers above 87 over here. So on the pop-up here, you'll see 87, but there's two numbers, which are R3 3406 and 3423. So there's still a lot more to the upside on this week, and my expectation is, based on volatility, based on how we've traded so far this week, as long as we don't make a new low, which was 33.26, which was yesterday, we're probably going to see this upwards pattern that I've drawn on here as far as the market grid continue to move up. And the dragon formation is not necessarily a negative formation, but it does tell you that you're coming into some heavy resistance up here, and that the overall patterns are going to probably contract over the next several weeks. And I've talked about this number of times, is that when we start to see the volatility contract, which we're seeing on a weekly basis right now, that tells us we're getting closer to a volatility spike, and usually volatility spikes are on the downside. So, yeah, so, okay, we're going to take one more look. I'm going to go over to a different chart here, and we're going to go and take a look. This is the ES. I want to look at just a pure pattern here. We're going to go to monthly, and we're going to go back to the cash market here. So you see the month, I've talked a fair amount about this, and the monthly R3 is 33. I'm sorry, R2 is 33.95 on the monthly. This is the cash S&P, and then on the R3 number is 3461. So I'll bring that over on the screen here. You see 3461 R3, R2 33.95. So from a monthly standpoint, we're just mid-month of August, and this is likely to continue at least to R2, which is 33.95. And like what I'm trying to set up here, and I'm watching closely, is if, and we'll say when or if we print a high over 33.93, if we see what kind of follow through we see. Do we immediately test 3,400, and do we take a run? My expectation is that we will, and we'll probably move toward 34.30, 34.60, just going up on this grid as the month goes by. Originally, I think not this last Sunday, but a week before that, what I set up was I thought we were going to go into a really sloppy week. This was not this week, but last week. And what happened was it wasn't sloppy, but it was narrow, and it was methodical. It went up every day. And that pattern has, with the exception of yesterday, that pattern has continued. Now, one of the things, I just brought this chart up here. I talked about this. Yesterday we had an outside bar where we made a higher high, a higher low from the previous day, and we closed at the low end of the range. Well, this thing just gapped higher and just negated it. A lower close today would have meant something. Since we just reversed and made a new high from yesterday, all of that whole reversal pattern just went out the door. So it's all the way all the way through there. So yeah, we're looking at right now S&P is trading 33.83. The high's 83.50. We just printed a new high just as we're watching here. But this thing is going to continue. 93's in the cards. There's nothing going to stop it. And then we get to watch and find out. Maybe we'll get to see it today. But we'll see what happens. Let's go to NASDAQ real quick. I'm going to go back to the white screen here and go to NASDAQ futures. And the scenario that I've been setting up for the NASDAQ, which I still think is valid, is that the NASDAQ is going to stay within the grid range, which is the extreme 11,555. This is futures. And on the downside, 10,382. So far this week, 10,876 and 11,283. So we're basically operating in an S1, R2 type range. I talked about this on Sunday night's video. This is the setup that I expected. We didn't see as much weakness, which I didn't think we would, but the move above the R2 number at 11,223 sets us up for new highs possibly into this week. And a higher close this week will just do nothing more than keep this market in a sideways range. And let me draw in a couple things I think is important. I'm going to do two things here. I'm going to broaden this out just so we can see this a little better. Hang on. Okay, I'm gonna move this over just so we can see a little better here. But this is most likely going to set up what's called from an Elliott viewpoint a running ABC pattern. So it will look something like this. You'll get this high here. This is the first low. We'll make a new high here, and then we'll stay within this pattern. This is what I'm talking about. This grid pattern is flattening off, which is telling us that we're just going to be locked in a range. So there's no more runaway, at least for the moment, in the NASDAQ. Now, the one thing that is out there, if you notice the PPMs I was talking about, 1.34, this is actually weekly, 2.14 and 0.81. And this one over here on the far right, PPM2, is just exploding. And this is doing nothing more than this blue line. This is the measurement of the angle of attack. So it's accelerating underneath this action. And this is what this tells us. Even though it's a long ways away from the price action, what it tells us is that the probability for this so-called collapse and second wave and retest of March and all that stuff you hear out there ain't happening. And I'll bring up the WaveTech database as well, because that also, those of you who watch my nightly videos know that we've got about 66% of the stocks and mutual funds and everything that's in our database are currently bullish, meaning that they're in trends. So the whole WaveTech concept, the models, all that stuff are trend following models. They have pattern recognition. They encompass all of these PPMs and understanding levels of trend. And there's a lot of them. There's over 11,000 out of 16,000, 11,000 symbols that are currently trending. And my joke has been for 20 years, I'm not going to, and the database has grown, but I'm not going to be wrong 11,000 times. Now, 30 or 40% of those trades probably won't work. There'll be small losses, maybe that type of stuff. But 60% of this current longs in the markets are going to end up showing some ROI, some better than others. But this is my argument: is people that say that the market's being driven only by 5 stocks. It's complete BS. There are tens of thousands of stocks that are trending right now. Those people only can only look at 5 stocks. Very few people you're going to find to have a database as deep as I have in my own software environment that we can watch this type of thing. The only people that even come close to attempting it is somebody like VectorVest. They've got a pretty deep deal, and they've got a lot of analytics and stuff. But this is much different in that they're not really giving you buy and sell signals because they don't want to be responsible. We put out actual buy and sell signals in our software, and that means we have to be responsible for those signals, meaning that we tell you where to buy and sell, and then ultimately we have a lot of metrics around them so you can get an idea if they're good ideas or bad ideas. And that's an important distinction from things. I once upon a time worked with a firm called AIQ out of Lake Tahoe, and that was where I got my idea for my first software company. And they had all these numbers and stuff, and the original founder of the company, used to have all these confirmation ideas. And I always just said, hey, Jerry, just tell me to buy or sell. I don't care. I don't want to do all this extra work. Tell me buy or sell. So that's really the concept that came out of that. Thought, well, if I'm going to do something like that, I'm just going to tell you when to buy and sell, and that's what we do. But all of this patterns, everything that we're seeing here is actually in context with a trend, and with the PPMs, at the numbers I've just mapped out here, these are trends that aren't going away, and they're going to last for a while. And typically, in a lot of these minor trends, especially from trigger points, they end up staying long. 200 to 250 days is a typical holding period. Some of them are much longer. Those are trading days, so that's the better part of the year. And a lot of this stuff on an intermediate basis just came in over the last couple months. So we have 6-8 months of positive trends ahead of us. All right, let's go to interest rates, and then we'll open up for questions and start to go through some stocks. I'm going to do metals too before we do that. So let me speed up here so we can get through this. What I want to do is just take off the grid off of this thing just for a second. And this is the weekly 10-year, and this thing is breaking above both averages. The only issue that I have here is that PPM2 is a -2. Now, there's going to be a fair amount of resistance right around this level where we've actually downticked a little bit. We did have a high today of 0.69, and now we're at 0.65. I talked about last night, there is tons of resistance on the upside, and there's going to be resistance between 0.72 to 0.78. Then there's another one at 0.84. And then ultimately, there's going to be so there's resistance here, then there's going to be resistance right at these old highs, and then that 40-week moving average is going to be a major resistance. Right now it's at 0.109, so basically 101, and that is declining every week at almost 3%, 2.84. So that number is going to come down. It's going to end up, by the time weeks and months go away to get to the price to that level, we're going to be probably at 0.84, maybe 0.9. This is going to continue to go down. So there's going to be major resistance. But I've talked a lot about this before, is that the Fed does not want the yield curve to flatten. You're starting to see here, this is the 10-30 spread. You're starting to see it move back up, and that's going to continue to stay firm. It actually went a little lower than I thought it would, but it will stay firm. The U.S. will not have negative yields. They're going to do anything and everything that whatever they have to do to keep rates from going negative. So, okay, but as far as the longer term implications of this, I actually think we're looking at this being more of a positive for the markets. We want to see the markets actually, interest rates actually increase. That's a good thing. That would mean there's demand for credit. There's other things going on. I was surfing around the internet. There's a lot of folks telling you, especially like, what's his name from Allianz, L. Iron. I mean, he's telling you, the bankruptcies, they're still playing this game out there. And it's just not going to matter. And they're trying to keep this negative dialogue out there. It's just not going to work. And I guess as long as that stuff's out there is a good thing, because you're probably going to see the markets continue to climb the wall of worry. And there was something else I want to bring up, just why, yeah. So anyway, but that's pretty much it. I'm going to back up for just a second, because I want you to see that. Also, I put the weekly VIX up. This thing is continuing to go down. I think we're going to see the VIX sub 15 at some stage here very quick. It's starting to move down. If we go over to the daily, we're going to see we tried to get a reversal yesterday, but this thing is drifting lower, and we're below the 200-day moving average on the VIX. I believe we could see a sub 15 number, especially if we get up to the 3460, we get up to any of those higher levels that I'm talking about, and interest rates continue to tick up. Is going to be a positive, not a negative. One other thing I want to touch on is the volume, and I talked about this in a couple videos ago, is that volume is stabilized, but it's stabilized at a slightly higher rate. Back before in February, the daily numbers were around, let's see here. The daily numbers were around 4 billion. Now we're closer to 5, almost 6. We've stabilized here. And this has a lot to do with all the new entrants into the market, things that people are there's a lot more people trading, I guess, because everybody got locked in their house and they've got nothing else to do than anything. So anyway, but everything that's unpacks the market, some interest rates. Let's go and talk about gold, and I would tell you that gold is broken. Okay, some of you aren't gonna like to hear that, but it got broken yesterday. And you don't, this type of move from the all-time new high down to the 40-period moving average, then that's not a good sign, okay? But it doesn't mean it's broken, meaning it's going into a bear market. It means that you can forget new highs for a while. But what there will be, and I talked about this on the video last night, what there's going to be is some crazy good trading out of this type of range. So this is the daily, and we've already rebounded. You can see we traded down, and I talked about this in a video last night, 1874 low. The 1881 was the 40 period moving average. You bounced right off of that. You got a reversal pattern. My guess is and I discussed this last night, just kind of going further into it, is that we're going to see back to 2000, maybe even 2050 out of this thing. This pattern, I will cover this tonight on the video. This pattern is going to be, this is awesome. Okay, folks, if you want to trade some gold, I'll do my best every night to give you some parameters to look at, and the market grid is going to be a big help on that. So let me put the grid up there just so you can see what's going on. Last night, the extreme was 1870. We printed 1874. We have now traded back toward the R1, and I mentioned that we could do that last night in the video, that we could trade back to R1, and ultimately you can see this monster range. This volatility is so huge right now. We're looking, you're looking at, $100 expanded, $120 range. This will contract over the next several days, and whenever you get a volatility spike, this actually goes to what I was talking about on the S&P, and we'll probably have an event like this in the S&P at some stage, and all these and the equity markets. As we climb up into this upward slope here, then you get this big volatility spike. So once all the volatility starts to collapse in a big way, it will expand, and usually, as I said, it will expand on the downside. So I've got my eye watching for this stuff, and that will be on it. But the last night's range, and it will be most likely what we're going to stay in, is this upper end of the range. Could trade as high as 1984 to 2021, and there's going to be both sides. You're going to be able to trade both sides, and going to the weekly is going to give us the best view of where to trade this thing. You see, we spiked. Not only did we spike all the way down to the 40-day moving average, we spiked all the way to the 10-week moving average. And I haven't talked about this for a while, but I use 10, 21, 40 on all these charts. So they're all simple averages. I know a lot of folks like to use, some kind of, adaptive moving averages. I don't like them. I like the simple because they have, so the longest term moving average on the 40-day daily moving average is equal to the 10-week moving average. And if you think about it, 10 weeks has 50 days and there's 40 days are calculated, but they come up with similar values. And last night, it was 1868.70. The low was 1874. We had a ppm at 1.35, less than a 10% probability to decline on that number. I didn't discuss this number in the commentary because that was the furthest thing from my mind, thinking we're going to hit a 10-week moving average. And we did it. And now we're rebounding back into the grid. The extreme of the grid is 1929. We're trading 1950 right now. But this market will most likely come into this range. I don't know that we're going to test this low end again. We may. It got pretty emotional last night. There was a time gold was down about $60 in overnight trading last night when I was doing the video. So there's definitely plenty of volatility. There's things that there's going to be opportunities, and this market grid, I'll make sure I get them on the screen like this every night, so you're going to be able to do it. So this is the grid for the week. 2050 is very likely we're going to rally another $100 back to this 2050 level. It's just going to be very volatile. So 1950, 2050 is probably going to be a range you're going to be able to trade, and I'll fine tune that once we've seen that. And if it does go down to 1874, you can buy it blindly there. You can just step into it, and that'll be all it will take. Yeah, no, it's 1021.40. Somebody thought previously. No, 1021.40. 21's the only Fibonacci number that made it. This was research that we did back in 1984, actually. All right, so silver, I guess we got to do silver. Then we're on to, I know I'm seeing a lot of Tesla comments, so we'll hit it. But this chart here is really going to be this is going to be a wild trader as well. And the grid will be the place you want to be. Last night, low 23.58, 23.01. So we just fell short of the STX number, and then we rebounded from there. And we're just not, we're going to set up a monster range. So if you can figure the low end of the range, maybe some options on this thing may be a really good way to trade this thing off of these lows, but you'll be able to come in and play this market in a range. And we're looking at the range that you see that we've set up. This is weekly that we're looking at. So far, we've had a 29.53, 23, $6 range. You know, silver hadn't moved $6. If you go back to previous, it hadn't even moved in a $6 range for 6 months or a year. Now we get it in 1 week. As a matter of fact, it's the second week. Last week, 29.95, 29.91 to 24.60. This week, we made a lower low, 29.53. So this is going to set up a pattern. I'm going to draw in just like what we've seen. This is not as clean, and I mentioned this last night in the video, that the patterns from a technical standpoint are not as clean. But I expect the market grid will start to contract, and you'll get this ranges where it does this, and this is a ways out, so this is a weekly graph. But we're going to trade within this grid on a weekly. And all you're going to need to do is to watch for reversals, probably use an hourly graph, or you can use a daily, looking for the market grid on a daily to be hit. But this will most likely just set up a big giant flag here, and I'm going to clean this up. But this is going to set up this big zigzag type flag. How complex it gets, I don't know. The grid will come in around it, and the question will be, which way is it going next? And I'm still bullish long term. We'll go look at a monthly graph here, but this, I suspect we're going to go higher here. With the perspective of a monthly graph, what you're going to see here is we've actually went to the extreme on the monthly. This is, like I said, we're mid-month, so we're not going to see any more numbers. We're going to trade within the grid on the monthly. The extreme is 28.88, and on the downside, 19.54. So we've traded we have not traded the whole range here. Because last night we got down to 23.58. So the support 23.11 is S1 monthly. Let me bring that on the screen here. S1 is 23.11, 23.58 last night's low. That's, I would call 23.11, 20, somewhere around 26.55 is going to be the upper end. We could print into that 27 handle, 27.75. But I think somewhere up here we're gonna see a reaction here. So I will absolutely take a look at. I'll be covering these markets over the foreseeing future until something changes here. I know a lot of folks are watching it, and it's important to understand as well. All right. So we're gonna move on here. and we're going to hit on Tesla. And I saw a really funny meme the other day, and it's just it's sort of funny about this split situation, which is somewhat comical, as it was a picture of this girl, and they said $1, and she had this look like, I'm not sure about $1. And then they said 4 quarters, and she goes, oh, that's exciting. So, you're still going to have the same amount of stock. There's going to be a lot more supply out there. Is it bullish? I don't know. It's certainly, you can't argue with the tape, right? But you're seeing the PPMs are turning up here. This is daily Tesla, and we're breaking way out of the grid because everything is off. And I saw a comment a minute ago on the timeline. Somebody said Robinhood is a volatility machine. Yeah, I mean, there's just folks just piling in on this thing. I think I'd be really cautious about trying to buy this stock up here. But let's go to the weekly and just see what we can find there. Yeah, so I got it trolled on the channel a little bit after one of my live streams about my Tesla. When this spike happened, no one wanted to hear. I said that was the top of Tesla. I still think it is. I don't think this thing is going to go flying through the top here. It could. PPMs are starting to turn up, so that's good. We got crazy PPM levels, 5.63, 5.83, and 4. So the 10-week moving average is right now 1303, and that's going to be your bottom end. But I think we are going to stay in this range, in the market grid range. Right now, you'll see it is 1648 RXT, and what we have 1365 S2 was 1364 for a weekly this week. This thing's probably played out. And we'll see. I kind of trolled Tesla the other night. We were chatting on a premiere that we did on our daily video. And I don't know if you've ever been in, but they're a piece of shit inside. I'm sorry. They're like plastic. And they're not, for 60, 80 grand. I mean, come on, you can buy a nice BMW. Won't have to run on electricity. Yeah, so I mean, I don't know. I get the whole thing. And like I said, if you live in a coal or gas-fired area to get your electricity, you're not doing it. You're still burning fossil fuels. Here in Phoenix, we are nuclear powered, so we're about as green as you can get. And you go through Scottsdale and around the Phoenix Valley, there are Teslas everywhere. So I get their popularity. I'm just not impressed with the car itself. I've ridden in a couple of them, even driven with the car driving itself, which was kind of scary, but so was the driver. I wasn't driving, was also freaking out while the car was going down. He had his hands like 2 inches from the wheel to grab it back and grab back control, so it wasn't high level confidence. But I get the whole Tesla thing. As I've said, I get I love Elon Musk. I think the guy's genius. There's no doubt. So we'll see. Yeah, and somebody just said they have a larger carbon footprint than normal cars. We'll see how this all plays out. I know we've got some folks from Germany on. They tried to get rid of. They've had their issues with energy and being green. They've tried a couple things and it doesn't work. But yeah, so we'll see. So much for that. I mean, fundamentals are somewhat of a joke, but fundamentals were a joke on Amazon for a long time. But this stock is going to be stuck in this range. It could blow up, I guess. The PPMs are certainly very bullish. And when you go to monthly, there's not a lot of data here. You're going to print up. Let's see what the month. We're getting very close here. We're at 1585 is the high this month. 1615 is R2. And that spike high that we had, that crazy spike was 1794. I think that's going to be your high for a while. Uh, and it's just going, we're going to set up this range. And just like I drew in on the silver, we'll do that here. Is this, this market grid is just going to get this thing in, and you're going to get some kind of zigzag. So once again, these stocks topping out with these high volatility like this is awesome, because there's a lot of trading opportunities. There's not going to be a lot of money made. I guess you're just going to watch your money flop back and forth if you're holding a position. And if I bring up a model, bring up a WaveTech model here, we go to the weekly. There's not enough data. Here we go. Yeah, if you look at the weekly, we've been long since October 25th, 2019 at 328. So that trade's not going away. That's a long-term hold. It's not going to change anything. It's going to let this happen. So if you own it well, you can ride through this, but there's definitely going to be more consolidation. I think if we had to draw anything in here, just going to the weekly, is this. You're probably, this spike here is probably the next phase, and then you'll come into this, and we could set up a dragon formation, which ultimately could end up to be something larger, maybe a bigger top there. We'll have to see. And EB, I would forget. I'm a former Porsche owner. There is no substitute. But yeah, so the this pattern, we'll see this. This will be etched into YouTube forever, so you can go back and watch this thing on Tesla. And I don't know if anyone's keeping time. I'm not sure what the timeline is. I can't see the timeline of the broadcast right now, but that's certainly something that we want to mark down, because I think this pattern I've drawn in here will be your pattern. Maybe after this one, then maybe there's a move up, but there's still more work to do. At least I think everything, actually, even though the S&P is going to probably move into a new high, we're going to see a lot of things continue on some of these indexes. But some of these individual stocks, whenever I see that spike, when I saw that 1800 spike, I thought, uh-oh, that was it. So a lot of time on Tesla. Let's go to Bitcoin, because I've been watching that really closely. On a weekly basis, still have a weekly buy that came out at 87.36. And I teased you guys that we're working on the cryptos for the WaveTech tool, and we are. The data source we have is not working out. We're working on a new data vendor, and anyway, hopefully that will get done. I thought we were super close. We were, and testing, and then there were some issues. But on a weekly basis, that was the last trade. We go over to a daily, and it's funny. Do you remember, everybody, that when Bitcoin was going to be this non-correlated asset, and it ended up to be a correlated asset? Yeah. Yeah. Be careful. I hate when it looks like we've got somebody coming out here putting, um, yeah, sales information. Not good. Um, yeah, we're constantly deleting all these bots off of our comment line. It's crazy. There's three of us constantly deleting this stuff. Yeah, and uh, it is definitely correlated. But on a daily basis, I need to switch this model over. Needs to be on 3.2 here, or on 1.2. Yeah, so the last 1.2 buy was here at 93.67. It's still holding this trade. And the key support on Bitcoin is 10,875. That number is moving up daily. And if you look at the PPMs right now, it's at a 1.04. There's less than a 10% probability for that number to be taken out. And just to give you an idea, that number is moving about $120 per day. So that would be your stop point, 10,875. Tomorrow will be 120 higher. It'll be at 11,000. You keep moving up underneath this thing. And we should see this pattern finish out, but we're going to have to get back above the 10-period moving average to get this thing moving. That's 11,556, or close. It won't take a lot to get above that. And then we can start moving this trend up, and we'll probably see an acceleration in the PPM1. So, all right. So, we'll start throwing out some numbers. Somebody just put RTX, and just so you know, for our technology, a former Raytheon engineer built all of our technology. So we'll go to, we got a buy here at 64.23, 63.89, 63.89, so it's in this pattern. We're seeing acceleration on PPM1, 0.75, so the support level is clear at 60.27. So that would be your stop out point if you broke below 60.27, and that number is jumping at about $1 a day. So you want to follow that up with about $1 a day. As far as the weekly charts go here, we're trading up at the extreme of the week. 66.17 is RXT. We printed 66.15. So we're pretty much at that point. We saw a reversal last week. We get a higher close this week. You're going to get 2 to 3 more weeks on the upside. PPM2 is a screamer. PPM1 is down. So we have one of these mixed pictures where PPM1 is still trying to find its legs, and we'll see how this thing sets up. It's currently at a minus 131. So typically what that means is you're going to be locked in a range, probably up at the upper band of this grid, which is probably 66 and change as far as that goes. AMD just bought a new computer. I got just got a my first Ryzen chip. I'm impressed so far. AMD, we had a buy there. It's also hitting, last week it hit the high end of the grid, 88.48. Most likely is going to go, a lot of these stocks are going to be in a sideways range. So if you let me go. Yeah, if you look at this for the week range, you might want to jot down these numbers on a market grid, but you're looking at 85.16. So R1 is 87.79. So major resistance 87.79, 91.07. So, yeah, it's funny. I never look at SPY, but yeah. So let's put some Fibonacci stuff on the screen here. Let's look and see what kind of, if there's any targets out there that make any sense at all on some of these stocks. I'm just adding that. There's nothing on SPY, but yeah, SPY will probably be up in the 34 handle just because that's where the S&P is going. Yeah, so we covered gold and silver a little bit ago, so that'll be on the replay. Let's see, we just covered RXT. What else we got? Yeah, Intel. Yeah, it'd be interesting because Intel, I discussed that last week. We can, and it's exactly actually what I thought it would do. We're staying above the 200-week moving average. We're just hovering right at it. We're going to set up a low and most likely start to move into the grid here somewhere between probably 51 to 54. This should move up. There's no bottom here yet, but there's certainly, this is the weekly. We go over to the daily. This is pretty much grinding out what I talked about on Intel last week, was that there's a lot of work to set up a low here, and it's going to take, I would guess, just looking at a weekly chart, it's gonna be in this range for another 3 to 5 weeks, and you can trade on going back to the weekly, you can trade that weekly grid range is going to be pretty consistent between 54 and probably extreme 44. So 44.92, 54.24 is going to be your range for trading from that standpoint. Okay. Now this is interesting. We've got Pfizer PFE. This is a weekly. There are some objectives on the upside for a move to 42.95, possibility of 47.28, 49.96. Do have a weekly buy signal on this. So this is a positive stock here. We've got all the PPMs accelerating. I would suspect you'll see probably move up into that 47, 49 level. We'll look at a shorter term chart real quick. Yeah, it's interesting. Short term just went neutral, but that longer term intermediate chart is definitely still very bullish. Actually bought at 34 and sold at 37 here on a short term trade. So not a lot there from that standpoint. Yeah, if you want me to cover some oil stocks, give me some tickers. And I'll be glad to do it. Here's First Majestic Silver. We actually got blown out of that thing yesterday's open. On a short-term basis, PPMs have failed, but we're trading at the 40-day moving average, which is likely to be support. Let's go to a weekly mode here. Yeah, here we are, exact grid. It was interesting that the target, the Fibonacci target was 1506. It printed 14, see, make sure I got the right bar. Printed 1450, and we didn't see any follow through. We're back at the bottom of the grid, but we're also at the 1090 is major support, and that number is moving up at about 20 cents per week. So that's going to be down at that $11 level is going to be pretty good support, and it'll probably trade back into the mid-range of the grid, you know, somewhere between 1240 and 1350. So it's a trading stock. I don't see any really trend here. The PPMs are strong, but the analysis and the silver is going to be pretty much the same. We'll bring up Alibaba, and we've actually traded into the grid. Notice that we on 710, I remember talking about this several weeks ago. This came up in a couple live streams ago, and we hit the, two things happened. The price projection on the upside was 265.94. We hit 268. We also closed above the RXT number on a weekly basis, which suggested we'd get at least 2 to 3 weeks of sideways to down, and now we're 5 weeks into that sideways to down. But the underlying trends are still very positive, and this 10-period moving average at 239 is substantial, and any move down to that level is certainly a buy. And then you're going to look at the upper end of the grid. We could see a move as high as 260, back to that 265 test, and possibility of seeing a move to around 282 on this stock. Brinks. They must not be moving much money around from businesses anymore, huh? But this is setting up a decent bottoming pattern, but it's not anything yet. There's not going to be, yeah, you're going to see more consolidation for several more weeks here. We look at a daily, it's probably going to look pretty sloppy down here. Yeah. Yeah, here was, right here, this, on 729, we did get a close above the grid, and then we got our 3 days down, and now we're back in the grid. We got another, looks like another close there, and now we're finishing off that little short-term trigger that suggests we're going to go in a sideways range. So there's PayPal on a short-term basis. There is some Fibonacci numbers here. We got 208, 216 as a high target. Those were reached on this last run up. We saw a 204 high, so we basically completed that. We went in between target 1 and 2, which is 196 to 208. Now it's setting up, there's some good support down here at the 40-period moving average, 170, 175, 182, 175 are pretty big numbers, and that level will hold. But I don't see any real rebound coming out of this pattern at the moment. Here's the weekly grid. We did close above it. Now we're into, we'll call it the second bar of sideways to down. So there's going to be at least one more week, and this 10-week moving average, 77, that corresponds with the daily 40. That's going to be that number's going up about $3 a week. So you're looking at 180. Anything against 180, you can actually play that for a trade. I don't think there's going to be a new high out of this pattern, but there is going to be a trade here to go back into the middle of the grid, which would suggest a move back to 202 to 210 possible. So there's a pretty nice trade here if you can get anything close down to that 180 number. Yeah, so USO, very similar. I'm going to bring up the oil futures just to cover that. Same kind of pattern, but there is some Fibonacci projections here for a move to 38 to 46. And the PPMs are pretty powerful. This is a weekly graph of USO, and that is substantial. This is, I've talked a lot about crude oil. I haven't covered it on a nightly video for a while, so I'll just bring it up here right now. It looks very similar to USO, obvious reasons, but the PPMs are all very powerful, and ultimately we're going to move toward these objectives around 40. We're going to call it high 48 to 52, possibility of going to 54. And I've talked about this many times in the past, is the only reason why crude oil is staying stable and is moving up is because we're going to use more of it. Not everybody's driving Teslas, and the airline business is a long ways from being healed, but it is starting to burn some more fuel. Things are starting to come back on, there's no doubt. And so this is going to be a positive, and this is the weekly chart, which is probably the only one that you need to watch. The market grid suggests that the range, we're printing up toward the higher end of the range, which is 45.99 to 46.50 or 45.35. So we're almost to R2, 45.42. And then above that, 45.99, 46.50 would be the next number. Yeah, I see a comment on Tesla. It uses paint and rubber equals oil and plastic, by the way. The cars are full of plastic. Okay. Here's AXP, American Express. It's interesting because there is some longer term projections, and this is also from a market grid viewpoint. Looks to me that this stock will move higher, and the targets right now at 129, 144 is the target range. That's a nice move. That's 40% move on this stock. It must mean people are going to spend some money and maybe start traveling again. We'll see. I've heard a lot of talk. I saw some chatter on the timeline here today that we're seeing, that a lot of talk about the Russian vaccine, right? Not sure what that's going to go from. All right, so yeah, so I would say I would be bullish on this stock, and if you're using a WaveTech tool, let's just take a look at, let's just bring up WaveTech. So American Express has a buy signal. Yeah, I got a buy in this little breakout here. It was long, got out of this pattern, it broke out of the pattern, bought the breakout. It's up 3.79, long on 8/10, which was Monday at 99.49. Oh, this actually is a daily. Let's go over to weekly and just see what that's doing. This will be a couple things I'll show you here. Okay, it has no position on a weekly basis right now. I'm going to flop it over. This is on 3-2. Yeah, so it's, but when WaveTech gets a buy on this thing, this is going to be a really good buy. And it's going to be, like I said, the targets are in that 120 range. So that is definitely going to be it. And, you know, so right now there's nothing there, but let's take a look at the trade profile. So when it does get a buy, you can see exactly what it's going to potentially do. The average gain is 21%, so that would put us, depending where we get it, roughly that 120 level. And I was talking about bigger numbers when we were looking at TradeStation there just a minute ago, and that is definitely this is definitely a really good looking stock. There's no buy on it right now, but you definitely want to have this when it's time. That's for sure. And I'm going to do an advertisement. If you want to sign up for this tool, we prorate it through the month. There's no trial, but it's getting pretty cheap. It's about $50 for the rest of the month. You can cancel if you don't want to go forward, but I would suggest, I tell everybody, at least give it 2 or 3 months. Come to our trainings, ask questions, and this will be best way to go. But this tool, we cover over 16,500 symbols in here. So this is something that you can definitely use to help guide those, and you won't miss that. You can put American Express in the signal in a watch list or something of that sort. So anyway, so let's go ahead and go back here, see what else is on the timeline. Yeah, I promised on the video that I'm going to come up with some price objectives. You folks may have seen this. This will be good. We'll go back to we'll go back to something here real quick. So this was one of my nightly worksheets, and I was calculating. This goes back on 4/30, and this was the pattern I was trying to project out. The only thing that happened, I think we had printed up at the 28.79, so I was estimating a wave 4 and then what the projections were. And this is what I talked about. We've actually printed these numbers today. This goes back to a calculation that was done on 4/30, and this was whenever I do my nightly videos, I have a couple sheets like this, some fundamentals that are going on, and then some technicals. And this particular one, I went on, and I had MDY and some other notes down here, and major pivot was 31.24. We obviously took that out, but the men target's 33.82. If wave 5 equals 1.618, then 35.14. So the answer to your question would be somewhere probably up in the 35 handle is where the S&P will go. I'm going to fine tune this calculation, and just see what's going on and see if I can come up and fine tune that projection. But probably 35.14 is a pretty good number on the upside. Yeah, so let's see here. Find some other symbols. Here's Visa. Interesting chart. Yeah, it's really, yeah, I just want to make a comment here. I think it's really interesting that a lot of these stocks, especially economy-based stocks like Visa and PayPal and some of the ones we've looked at so far, and I kind of get a theme from you guys asking me these questions, but the targets, there's Fibonacci targets on this for 254, and the extremes are 280, 296, and I'm going to bring it up in WaveTech just so we can get that. Let me just put that up on a weekly, just see if there's. Yeah, so Visa's long on a weekly basis. It's long at 194, so right now it's got a 1.5. I want to show you something on the WaveTech tool that's interesting, is that we can go to the trade profile here, and it tells us there's a map that's going to tell you about what the expectations for this signal is. So it's just not a buy signal, hope it works out kind of thing. It tells you that the average hold for this stock is 163 days, current duration is 51, and then it says the projected mean, which is 2145, 236, standard deviation is 263. I'll go back to TradeStation here in a minute. And then the average loss on this is 5.9, average gain is 21, and you'll see this bar up here, this poor to excellent bar. It's got a 241 rating. This is a very solid trading stock. It bought into this consolidation, and like I said, the minimum is a 21 gain, which is 236, would be a slight new high on this stock, and then that would be the next level. So we're going to map out, and every day that goes by, tomorrow it'll say 52 days of 164, and it doesn't mean it's going to exit at 164, but it gives you a perspective of the setup. So if you bought this stock at 194, 183 would basically be the average stop out point, and then the gain would be 236 with a standard deep. Now let's go back to TradeStation and take a look there, and the min here is 254, so it's saying the market pattern that's coming out of the Fibonacci's are saying that it's going to hit the standard deep number out of the models. And we don't know. What we do is we map out every model, and that's why it's going. That's why when you look at a model and what it's trading at, it's really that. Let me rewind that. When you look at a model and you get a buy signal, it's going to tell you where the average, the standard deviation is. And when I do these shows looking at this, you can see where the market pattern is projecting. So this is based on a Fibonacci ratio and a breakout. And of course, the old highs here were the 214 level. So, yeah, we got to do Apple, right? So Apple's high the other day was 457. The high end of the grid was 464. That was last week. This is a weekly. As we go to this week's action, we're looking at 436, 455 in the grid. 460, let's see, 453 was R1. So we printed an R1 so far. Maybe we can continue toward a R2 type move. But this range on a weekly is pretty good one. If I put up a 1.2, yeah, let's just go over. I'm just going to use this. Let's put Apple in here. So Apple's is long on a weekly, and it's long from 277. It's up 57%, and we can do the same thing. So we start to look at the we look at the trade profile. We can see what the expectations are for Apple on an intermediate basis. We'll look at a short-term basis as well, but it's 80 days into this trade. Normally holds 266, so a little bit over a year. When we get a signal, it'll stay on. And then we're looking at projected profit of 99%. We're 59, so we're still 40% under the average mean. And then 220% is standard dev, which would suggest this thing going to 890 kind of. But literally the target at that range is 555. Of course, we're going to get the split coming soon, so that will be one. What is that going to be? 100 and whatever. Divide by 4. Okay, so let's go to a daily model and let's look at at Apple on a daily, and it did have an exit. I'll show you what happened here. As there are two trades. We bought it down here. I'll bring up the exact numbers. We got knocked out when it declined here, and then it just broke out, and we bought it the day after the breakout. So it's long right now. It doesn't have much of a profit. So this is somewhat of a risky trade, but with this PPM 1 is at looks like 1.7. That's a big number. We're going to have major support here at 429 is 0.3 is that support. That number will update every day right now. So 429 is the big support here. So there's not a lot of downside risk in this. But these are tough trades on these breakouts. If we go over to a 3-2 model, I just want to see what it did. 3-2, I believe, came in later, but so 3-2 came in a little later, bought it at 281. It's still long. And the short-term models, one of the things you can do is you can do a combination where you trade both of the models, and one will kind of ebb you in and out, taking profits, and then you're holding, and they can tag team pretty good what's going on from that standpoint. So there's a number of things that you can do there, and yeah, so that's all. That's pretty much the two different models that are going on that short and long term basis. Yeah, it looks like going over just to the S&P for just a second. We've printed up to 84, 87 now, so we keep kind of grinding the highs here. I'll go over to a day trading screen here. We just punched out a new high on the futures a few minutes ago. So continuing, the grind is on. I think the machines are on. I don't know what they're running off of, but they're definitely there's some positive stuff going on out there. So they're not going to let this thing go. They want that 93 number. They want to see. I mean, if you go around, like I said earlier when we started this show, that if you go around the internet, I mean, yesterday's little snafu, boy, the folks are jumping all over it. That's the top and all that stuff. And now, oops, you know, it wasn't the top and it never was going to be. Um, all right. Who? Yeah, George put up this stock GSX. I love your comment on this. So Jonathan Klein, so he puts in Chump Live. That's what pumping the market? They're talking vaccines. All right. Yeah. So this thing here. Wow. Let's just look at this number here. I think this will be interesting. Is on the market grid when this thing printed a wild number. This is daily. The top end market grid was 144.44. We're printing 141. Oh wow, look at that. R3 141.34. The high 141.78, and massive reversal off of that number, and trading below the 10 period moving average. But because this 10 period moving average is up at 1.6, there's going to be a magnet to pull this thing back up, probably above yesterday's high, which is 109. You're going to look at a retest of that number, maybe push up into the grid a little further, maybe 115. So once again, this is one of those trading ranges. The market grid is going to start to catch up. Probably tomorrow's grid, if you had the access to it, it would start to contract over the next couple of days. Because the last 3 sessions, we've seen a volatility collapse, the daily range volatility collapse after the big spike, because we had two big days. We had on the 6th, we had a 110 to 131 range, and then the next day we had a 141 to 99 range, and then we see this contraction. So tomorrow's range, these grid numbers are just going to collapse in. And there's a video on the channel, by the way, if you haven't watched it, as I talk about the market grid numbers versus Bollinger Bands. And there's a contrast. Bollinger Bands are a standard deviation line. These are based off volatility and some Fibonacci calcs that happen. Okay. What time are we getting to be here? 12 noon Pacific time. Yeah, I'll do shop. Good one. Forty-day moving average support 977, low 980. This is daily, so pretty substantial range today. $27 range. And if you look at the grid, we're looking at right between R2, R3 on the downside, S1, yeah, nowhere near on the downside. So nothing there on the grid. Let's go to weekly here just to get a feel for it. Oh, there's your number right there. The weekly 952.55 is the 10-week moving average. You got a ppm of plus 2.89, less than a 10% probability to fall underneath that number. And it is rising at 25 bucks per week. So as we come into next Monday, you're going to have somewhere around a 975 floor on this thing. So I would suspect this thing will move back up as we as we go through the week. So there's pretty good play down here against this 10-week moving average. That's the magic. That's the magic number, in my opinion, on this stock. Yeah, George, I saw your email. I'll have Jay figure out how we can get in touch. I know today, once I finish the live stream, I've got 2 meetings this afternoon. So, yeah. Yeah, so, yeah, let's bring up BA. We haven't went through that. And in fact, I want to do something we did on the WaveTech training yesterday. BA weekly. Let me go to daily real quick. Take a look at Boeing. The stock is kind of backfilling a little bit today, down 2%. And maybe we'll take a quick run through in some of the airlines too. But PPMs are still pretty positive, 0.6. The support on BA is at 169, low 173. There's 30% probability for it to go below that number. Otherwise, 70% probability that it will hold 169. So trading against that number will be good. The upper end of the band is pushing 181 and 185. So this is in a uptrend as well. A short-term uptrend, but there's still overhead resistance at around 177. So break above 177, then you'll start to see this one move up. Let's just spin through a couple of these airlines. They're off a little bit today. They had a big day the other day, and not a lot there, but I do believe that these things are going to hit somewhere around there, move back toward the 10-day moving average. So there's a nice 30-40% move on these airlines coming again. And I talked about this in the WaveTech meeting yesterday, and I'll bring up a strategy. I think I have the right account logged into. Yeah. So I'm going to do 2 things. I fudged around with this thing yesterday. I built a portfolio a couple of days ago I had put out, there's a video, if you're just watching the channel for the first time, there's a video out there, how to take advantage of Warren Buffett's mistake in airlines. It was an absolute awesome trade, and a lot of it had to do with these WaveTech models. And what I want to do is I just want to clean up. I played with a bunch of numbers here yesterday. I just want to straighten out a couple things here that I put in. This will just take a minute. I just got 2 things I have to clean up. So I'm going to rerun this portfolio here, and we'll take a look just to see how these go. Now, what I just did was adjust a strategy, and it basically, this is how the WaveTech tool works. I'll just put this up again. You can sign up. It's like $97 a month. We prorate it. It's around $50 right now if you sign up, and it's easy to go forward with or cancel. So, if you get in there, I'm telling everybody, hang around for a couple months and get a good feel for it. We do training every Tuesdays and talk a lot about stuff. We're actually going to be breaking into groups because we have advanced folks and some other folks. But let's take a look. This should be run now. Yeah, so it's run. We'll take a look at this. I want to look at the current open positions. I turned them off, so we got trades, and this thing will show you exactly when you bought this. And it tells you what the percent of the portfolio that it bought. So this will actually run an actual portfolio. It tells you how much to buy and sell, when to buy and sell, and when to, it'll get you out when it's time. So on these trades, you can see the entry dates 8/10, 8/7, 8/10, 8/3, and this shows the P&L. So we came in on Boeing at 156, got a 15% gain there. All the other symbols already have anywhere from 3 to about an 8%. I guess we got JetBlue has got a 14% gain that came in on the third as well. So there's two trades that came in on the third. The rest some came in at 8/7, some came in on Monday, and this will track. It'll update every day, and if the trend breaks, something happens, it's going to give you an exit, so you know exactly when to buy and sell that. But this portfolio, just on two trades, has already done, I think, 92% this year on two trades, and just by running this portfolio. So one of the things you can do is you can just build these highly concentrated strategies. We talked a lot about this in yesterday's video. You can go and watch that replay from yesterday's stream. But yeah, so this is just a way to trade a batch of stocks. You've got an idea. You want to trade a group of stocks. You have some money you want to put in it. It will allocate the money out across the board, give you some diversification, buy, sells, all that kind of stuff. So good stuff. But yeah, going back to, let me look at some other things here, see what's coming up on the screen here. Here's Fastly. Do that next. And kind of a sloppy trader, no trends here. All, yeah, you've got mostly a downtrend going here, but it is looking like it's trying to bottom here. We'll go to the weekly to see if there's anything to be found there. I suspect not. Yeah, setting up a big giant dragon. So trading range for this stock, the grid on a weekly basis is looking at a S1 was 73.55. We printed 72.55, high 85.35. The grid, so we basically had an S1, R1 on a weekly basis. R1 is 85.11, the high 85.35. And now we're in no man's land somewhere in between those two points. We're closer to the bottom, I guess, than that. PPMs are collapsing. There's not a lot of history on this stock here. I'm going to see if we have that in our other database here. Yeah, I'll bring this up on here. This is a Portfolio Expert. And the last buy we had was way down here. This is the weekly. So it's just in this big range. It's kind of spiked out. There's not been a lot of buys, but if I go over here and switch it to optimize daily, then yeah, we got caught. This is one of the cautions I've told everybody. Be careful when you get these breakouts, when this thing surges like this, when we get a buy up here, never do that trade. That's just a bad idea. You don't want to buy a 52-week high. You don't want to buy an all-time high. Logic was flat. It was a good, last trade was a really good one. But then when you see this breakout, don't buy this trade if you're a user. This is not a good trade to buy. So we've got IBIO. Don't know this stock, but it looks like maybe a biotech of some sort. Yeah, here was the first signs of the issue on this thing was closing above the market RXT 505. The close was 550 back on one of these spikes, and that basically was the top 2 to 3 bars down. We've actually taken out 10-week moving average. This thing has still got a lot of positive PPMs. It'll probably rebound out of here back toward, we're trading 247. I'm going to say 294, 339. I'm going to bring this up and see if we have it in WaveTech. Nope, it's not in there. But yeah, this is pretty tough. We'll go to a daily. Might be some things there. Yeah, this little dots here, this is a major pivot here, 705. We did get back above 705, then the objectives up here at 1005, 1379. I don't know if if you could tell me, whoever asked for this stock, you know, is this, I'm assuming it's a biotech. I don't know what these guys do, or it's a vaccine stock or whatever. Yeah, okay. I figured as much. Yeah. Yeah, let's do Facebook. Daily Facebook is grinding in range. 10-day moving average, support 255, low 258 today. So you can trade against this number. Let me see what the, yeah, 1.10 ppm. There's a 10% probability to decline under 255. So you can definitely trade off that number, looking at the higher end of this range. If it gets down there at 266, 269 would be that. If we go to a weekly, we'll get a better range on this thing. So weekly, and this goes with a lot of these stocks that we've been looking at, a lot of these tech stocks and what have you. They're going to be trading in just these broad ranges. So unfortunately, you know, these grids, if you look at the grids that I'm putting up here on this channel right now in this live stream, you'll be able to get these numbers. These will be your trading numbers, and this grid looks like it's going to remain about the same range based on the weekly range. So these are going to be your weekly trading ranges for this stock. Alrighty, Etsy. Yeah, this is weekly. Etsy got a close over the weekly grid, 132.62, signaling 2 to 3 weeks of sideways to down, and we're definitely getting that. We printed a new high, and up 141, low 122. We're at S3 123.33, STX 119. So we're getting close to the extreme here. there's really no other support other than the grid, but we're likely to set up some kind of high-end pattern here. So I guess this is another, we'll call it COVID special, right? Everybody's locked in their house making crafts. Okay, let's see what else we got. Yeah, let's look at the Russell. I covered this the other night. We're going to continue to move this market higher. I don't know the exact number. It's a little less now, but we were about a little bit over 6% off the highs in the Russell. Obviously the S&P is pennies off the highs, and so this market is going to continue to stay playing catch up, and that goes to, and I'll bring up another chart here and covering the Russell that I think that we're going to see here is the Russell start to play serious catch up and moving the spreads even higher than what we've already seen. And so the grid for this is a weekly grid. The weekly grid high end is 1614 to 1627. We could push up toward that. We got a plus 0.52 on ppm1, ppm2 2.03, ppm3 is flat, and the 40-day, you'll see two numbers here. Let me expand this. So the 40-week moving average is 1462, and the 200-week moving average 1492. So we're looking at major support just underneath this market, and just like when we traded above these numbers on the S&P, we will probably grind along them. Then ultimately we'll start to see this move up. And what was the high? I believe this is the February highs. Yeah, 21st highs 1698. So we're going to print new highs, I think, on all of these markets. Yeah, we're still trading 33.81 on the S&P. So it looks like the magic number for S&P tomorrow will be the employment coverage, or otherwise the claims, and the continuing claims are going to be good. Yeah, I see, Jonathan, ugly red candles on SPY. That's why I don't use candles. Yeah, let's see here. Yeah, I don't need any. I'm an old-fashioned bar chart, open, high, low, close guy, and that's all I need to understand these markets. I think candlesticks certainly are pretty, but I don't get a lot of dojis and stars and all the stuff. Yeah, I can do that. I'm going to put the monthly numbers on SPY or on INX or SPX. Oh, this one's got an INX as a symbol. So these are the numbers here. 33.95 R2, 34.61, and 35.20. And if you recall, I think this here, nope, this one here, these were my calculations that I made 4 months ago almost, and that range 3382, 3514, going back to the trade station number from that range, you're going to see it is very similar range for the monthly. 35.20, so it right up there in that range, and this is for the month of August. Yeah, there is something else here on the monthly I just noticed is there's some high targets here, Fibonacci targets that came out last month, and 32, 38, we took that number out, but high target 2 and 3, you'll notice in this box over here on the left, 36, 38, 38, 85. Those could be very valid numbers, and we'll see what comes out. And those of you who watch my channel on my daily videos and the daily market commentary, what you're going to see is that I do daily commentary and I'll update as the market unfolds little by little, and sometimes I'll look out on the daily commentary a little bit longer, but these live streams we tend to get into more details of what's going on. So yeah, we went through quite a bit, Mel, on the gold and silver. We did do a lot on that. It'll be on the replay, and hopefully somebody's keeping track of some of these numbers when we covered that. I know in the past we've had people post that, and we'll go and update some of those numbers. We're trying to get some of those numbers. I'm not sure if anyone knows when I covered that. Maybe you can put it on the timeline here. Yeah, there you go. Thanks, Jay. 45 minutes in on gold and silver. Awesome. So yeah, what we'll do is when this thing reposts, when we're done with this live stream, we'll go through the timeline and put up there exactly what the, where I talked about different things there. Alrighty. All right. Here's something. Here's something we haven't covered is U.S. dollar. This is monthly. I know probably one of the most crowded trades have been out there, most talked about trades has been short the dollar. And when you look at the overall pattern, these longer term patterns here, it's really, we're starting to see even the monthlies start to lose the downward momentum. We're starting to see some stability. I've talked a lot about on my videos every day that I believe that we're bottoming on the dollar. This whole situation around debasement of the currency and all the pumping that the Fed's done, I was actually on that bandwagon back in March. I think there's some early, some videos that I did back in March that you can watch that actually talked about those type of things, but it's really not the case. Yeah, I'll come back on screen for a few minutes. So it's kind of slowing down. You guys are even getting tired, or I'll go back to some stocks here in a minute. But all these patterns, everything that we're seeing on the almost across the board, especially most of the active stocks, are looking very similar in that we're getting the type of patterns that are entering into a consolidation range. And it's very interesting if you watch some of our WaveTech, and yesterday's WaveTech meeting, where some interesting conversations started to come up. We always do a Zoom meeting, so with a user base, and if you're a current user, you'll get a Zoom link, so you're welcome to join. And I'm surprised that more people don't join. We usually get we don't fill the room up, we just have a 100-room Zoom, but there's some interesting conversations going on, and this goes to what I'm talking about here as far as market patterns go and looking at our database. And I talk a lot about in this channel that I have the view of looking at 16,000 symbols through our database And this is a very significant and very different viewpoint than what you see anywhere else, because I'm covering the actual rotation. We know the duration of all the trades we have on there. We can extrapolate out what is likely to happen, longevity of trends, all those kind of things. And that's when you just draw a static trend line, and you don't see me draw a lot of trend lines. I'll draw in patterns when we're talking about things, but trend lines to me are just amateur play. And I know it's just for me, I don't use trend lines. I always say if you put a trend line above or below, it tends to influence you that somehow that trend line's valid. And that's why I use moving averages, because I don't want to be influenced by some subjective line that I looked at and made that decision. I'm much better off. That's what the PPMs and using moving averages and understanding configurations and different types of things have helped me to navigate this crazy world for over 40 years. And it also is the driving force behind all of our models. So when I'm looking at a database, the models that we're looking at is we get a feel. So like right now, intermediate models, 66% are long right now, meaning that we have over 11,000 symbols in our database that are trending, suggesting that there is the probabilities, all the bias is to the upside, and many of them are only about 20% have. We also know how much of the expected duration has occurred in the database, and that gives us the ability which to look forward and say, okay, we may not realize 100% of the 200 or 240 days that are going to come into that are likely to unfold during this trend, but we know that probably 60 plus 80%. And it's interesting what we're seeing, like on our short-term models right now. I've never seen it go this far, but a lot of these symbols and this V bottom that we've been in are extending beyond their normal holding period. And I've seen for the first time on average, we're looking at around 92% of the trends that were issued off our short-term models have been realized. Now, I don't know if that same metric is going to come out of the weekly models. It's too far down the road, and we're about 20% in, so there's still probably 120 to 180 days left in the current intermediate trends that we see. And, I've not seen, when we get above 42% bullish, especially on the intermediate, that tells us there's a sustainable trend. When we get above 60%, which we're at 66% right now, that suggests that we are going to get there's a higher probability that more of these trades are going to end up to work out. And it's very interesting looking at a large database versus just looking at an index and making decisions, or looking at individual stocks. On this live stream today, we look at a lot of individual stocks, and I make comments about them and things of that sort. But that's why our portfolio manager and the database is so important that I've given you folks access to, because it gives you the ability to see the world from a different set of a different viewpoint. It's not necessarily, maybe it is that, the 30,000 foot view that people talk about. Maybe that's what it is. But the bottom line is there's a lot of things to look at. I talk about it in my commentary every night. And, I cover this very, very closely. Let me look at the timeline here. Yeah, right now there's a question here. It says, what is the probability of a corrective phase setting up? And that's what we have to watch right now, actually. We're printing right now 33, 83, 82, 80. That it really depends on how the market acts here. And we talked a lot about there's possibility for the S&P going around 3416 to 3460, and then we even looked at some longer term projections suggesting 3638 handle. So, and going back to what I was just talking about as far as the models go right now, and as far as the overall database goes, it would suggest that something higher than 3,500 is in the cards. And it's also suggesting, and you can extrapolate out whatever you want, that this current trend that we're in and this recovery is going to continue. And maybe it doesn't even matter who's president going forward, because the economy was shut down so bad. We've got a perfect V, right? We've got the V on the market, but we don't have a V on the economy. And as I've talked about and everybody knows, the markets are not the economy. But what we're going to see, I just see all these folks, Ray Dalios and L. Iron and all these people that are on the mainstream media now, and they're talking about depressions and all that. I would tell you that if the same mentality was around in 1930 that is out there right now with the Federal Reserve, fiscal response, and the things that you can do very quickly, you have to realize that in the digital world, the Fed can change the entire monetary base in a few seconds. It doesn't take weeks and months and printing dollars and all that stuff anymore. I saw a really interesting clip the other day from Ben Bernanke, and he was admitting that basically, this was the funniest. I was on somebody's Twitter feed or somewhere, I saw a response, and somebody said, how does the Fed create $3 trillion? And they said, open up spreadsheet, add zeros, hit save, close spreadsheet. And that's exactly what Bernanke, that is what happens. They can expand the monetary base by just literally saying, okay, let's add some zeros, and now it's there. And if you notice, I don't want to get too far down this trail here, but the concept here is, if you think about the whole Fed concept and what Jay Powell's been telling us, right, is they have lending powers, not spending powers. So they're just lending money, but where are they getting the money? They're making it up, and they can make up as much as they want. And the Japanese have proven that. I've got some old videos I'm going to bring out. I've been actually talking to, there's a guy out there, Hugh Hendry, was an acquaintance of mine. He was my keynote speaker at a institutional conference for our customers way back in 2010. And Hugh and I have been trading texts and stuff, and I hope to get him on. But he talked about something in 2010, and it's very, very valid today, is that we're all becoming Japanese. And what we saw in Japan and how the central bank did there, and the Bank of Japan, and how they expanded and how they supported the market. They own, I think it's about 70% of all the ETFs. The Bank of Japan owns them. So they've been willing to go to the point of supporting the economy to that level. And I don't think we're going to see that here. I don't think we're going to see zero yields. I don't think they'll go that far, but they'll do whatever it takes to support this market. So there will be at some stage an end of this rally. There will be some things that will actually look and act like a correction. We will have another one of those at some phase, but everything's being engineered, and that's just the world we live in. So as far as the dollar goes, I had the dollar chart up. I really think the dollar will be supported. I don't think they want it to go down a lot more. I will put it on like maybe a 10, maybe 15% band from where we are. I don't think it'll go down more than maybe 10% from here. That would be a lot. That would put us into an 80 handle, 80, maybe 82 handle. Right now it's at 93. I just don't see us going that much lower, and I think it's basically hit the bottom end of the range. So we were up around, spiked right after the whole COVID thing started around 106. It was a big spike. Now we got 106 to this 93, 92 level is going to be the floor, and they're going to maintain that. And, we talked earlier in this presentation about the treasuries and those type of things that are happening. And we're really, the increase in treasury yields, we're just not going to see zero yields here. And all of this talk of depressions and stuff, we're not going to happen. And I was going back to what I was saying about the 1930s, we had the same type of process then, the same digital process where you could implement money instantly. There would have never been food lines, and there never would have been a depression. They would have just filled the gap. And that's what you're seeing right now. I'm not saying that the numbers in the economy haven't been displaced to that level, but you're not going to see it and feel it the same way. They're not going to allow that to happen. And I'm a little bit on a rant here, but I also think that we're going to see, we've actually seen the beginning of universal income. And I've talked on some videos on this before, is that I think what we're seeing here is there's elements of the economy on the lower end of the scale of the economy are absolutely been decimated and vaporized, especially hospitality and a lot of service jobs that are low-skilled workers. And those folks need to be taken care of. I'm not a big fan of this, but you can't have a society that's disrupted like this, and they didn't make the choice. They were glad to do those jobs they were doing before. They had maybe they didn't like it, but they were glad to do it to exist, and that happens all over the planet. But now with this big part of the economy being destroyed, there's nowhere for them to go. So it's going to be very interesting to see what Congress and all these idiots do in as far as making decision on stimulus and all that. It's just the games that are being played is just amazing, actually. And so I'll just leave it at that. But anyway, just kind of got on this rant, thought I'd come back on screen here. And but yeah, I don't think, Christoph, it's not going under 75, not happening. You'll see, it's not going to happen. And there's a lot of reasons for it, because if you let the U.S. dollar drop too far, and then you've got problems with assets and other things, and you'll hear the Fed prop up the dollar. They're not going to let it happen. So anyway, yeah. So that's kind of my rant. We'll see what happens. And one of the things that you'll find, for those of you who watch my channel, we're right around 20,000 subscribers. We've grown this, completely organically. And I appreciate all the folks that are watching and spending time and have embraced the WaveTech tool, all that kind of stuff. It's been exciting getting to meet a lot of people that we would have never met before if it wasn't for COVID. So as much as the thing pisses me off, I actually like I like what's happened, and a lot of us, we have a lot of new friends. We've got international customers. We were always domestic before. We've got a lot of really interesting things going on locally here with my channel and what's going on. So anyway, no, we really appreciate it. But yeah, and it will keep a lid on gold, that's for sure. And I think just from the whole dollar scenario, the Fed, there's certain things that they can't happen, and I'm kind of touching on some things that are going on here a second. Let me grab something. I want to grab something real quick. Just bear with me for just 1 second. All right, I am back. I've mentioned a video that's out there, and if you haven't watched it, it's called Princes of the Yen. I have this book, and I just bought it. There's a chapter in here. I've been so bloody busy that I haven't had a chance to go through this, but there's a chapter in this book that was very well written. Let's see here if I can get the author up here. Richard, I believe he's a professor. And this is a very interesting book. And they charged me a lot of I had to pay like $50 to get this thing. But anyway, it's all about central bankers. But there is a chapter here that I just found very intriguing, and it covers just virtually everything the central banks have done in every crisis. And I will reference that chapter. I was hoping I marked it. I did not mark it, but I will bring it up and maybe talk about it again at some point. But the whole scenario around the dollar, it's so important, and it's really, my analogy is that we are possibly right now in the U.S. and Japan, early 1980s, 1984, pre-boom in Japan. And if they've increased the base of currency, they basically doubled the currency float right at the very beginning. I think it was March 15th. They doubled the float. And by doubling the float, they increased the amount of currency, and that's where all the dialogue around the debasement of the currency and all this weak dollar stuff and all that. But there's something else that happens. If the dollar is supported and you double the currency, guess what you have? You end up with this massive amount of buying power. And this is exactly what the Japanese did in the early 80s. And I've been around a long time, and I was talking to an old buddy of mine, and we were talking about literally the Japanese were buying everything. They bought Pebble Beach. They bought, I think, Sears Tower. They bought all kinds of property. They were buying everything on the planet, and they ended up with having all this purchasing power. The Emperor's Palace, and it's in the book, and there's a video out there you can watch, Princess of the Yen, by the same guy, Richard Werner. Worth a watch. It's about a little bit over an hour. But the Emperor's Palace, at one stage back in the 80s, I think around 1988, that one palace in the grounds was valued at more than the entire state of California. One palace. And so it was a giant bubble. And the bubble was created for a reason. And so I wouldn't argue for a second that we're in a bubble, but it's a long ways from being burst, I'm afraid. I think they're going to take this thing so much. You haven't seen anything yet, I guess is what I'm saying. And the opportunity, it goes to that whole crisis, the opportunity exists out of crisis for a complete restructuring of the economy, restructuring everything. And that's what we're seeing, in my opinion, out there as far as as far as what we're seeing in society, by government, ultimately will they start buying airlines? Who knows? Maybe. We've seen that type of activity before. In 2008, we saw a lot of bailouts going around. So anything's possible, but the U.S. dollar is going to remain fairly stable, because if they do stabilize it, it's going to be the whole next phase. And I saw somebody talk about something that they wanted to know. I think it was a Ray Dalio interview. What the Fed is doing with its newfound power. And I'm thinking, are you serious? It's not newfound. They know they've always had the power, which to increase the monetary base, to do these things. And like I said, I know I'm deep into this thing, but what happens here is that you're going to see the dollar supported, the purchasing power could just double. And if you're going to go against China, that might be the only way to beat them. China has state-owned everything. I have a friend that did some business over there in the agricultural business. they just supply the land, the Chinese government, and the labor. So if you do a deal with these guys over there, it's incredibly cheap. I can't blame anybody, like even Elon Musk was talking about, loving on China, because to do business there, they just supply everything. It's that simple. So yeah, it's pretty amazing. I know somebody that was doing some sort of cannabis deal over there, and basically it was free labor, free land, and you get to participate in that, and it's a huge thing. So that's something that the Western world doesn't have. But going to the scenario, go back to the book, read the book. There's some interesting correlations that you can make from the standpoint of what's likely to happen going forward. So be careful getting too bearish right now. We'll see. Having said all this, now the markets will collapse tomorrow, and that's okay because we'll figure it out from the models. But the bottom line is there's just things going on with the Dow, with the interest rates. When I saw the spike in interest rates start yesterday, you notice that nobody cares about it today. It was supposedly part of the story yesterday, but no one cares today, and that it's becoming very obvious to me that there's some things going on. So yeah, and I see Jason said something. Alibaba is delisted. Amazon will have problems. Maybe so. I'm just looking at a timeline here for a minute, folks. Yeah, anyway, yeah, I actually watched that talk with Hugh Henry. And matter of fact, I talked to Hugh right after he did that interview, and we're gonna do something together because Hugh and I, yeah. Anyway, we're gonna do something together. I actually got a text from him last night. We're just trying to figure out busy schedules. He's got a lot going on. I've got a lot going on, but it'd be fun to do. But I also have some footage that we made. It's terrible video because it was done in 2010, and it yeah, I don't know, maybe it was 720, I don't know. We paid a lot of money to get our conference videotaped, but about an hour and something, and there's some good segments in there. So I'm going to pull some things out, maybe do one of those review videos. I'll make sure Hugh gets a copy of it, but I think it'd be fun to get on a call and just talk about stuff, and that would be very interesting. I think it was George Gammon or one of those guys was on with him. He went down to visit Hugh down in St. Bart's, and so he's an intellectual guy. I've had, he's been at my house and been to dinner with him and his wife. They've been over our house many years ago back in Scottsdale, and he's incredibly intelligent, and so that's a good thing from an intellectual viewpoint. When it comes to trading markets, it's really easy to get tied in because all of these guys, Hugh and the people at Real Vision, these guys are frothing at the mouth, talking about gold, and it just had to roll over. Guys like Jim Ricketts. Same thing, you write too many books on things, you start believing your own stuff. And the technicals, everything got overdone, and everybody bailed on that trade. And we talked a lot about the gold and stuff. So yeah, yeah. Yeah, so anyway, I don't know if there's any other questions. I've just kind of got on this thing. I haven't been on camera, so this has been kind of fun to do. And we talked about a lot of stocks. Where are we at? Yeah, we actually missed the close, but we closed up at 3380.33, up 1.4% on the day. And that's it. So we usually finish right about this time. So maybe it was good that I went into this little talk. I think it was. But anyway, I just looking at a couple comments here on this stuff. Yeah, one of the things I haven't done a lot of is talks like this. So it's kind of fun. To be nice to not have to do it by myself. So that's why it'd be fun. I'm working on bringing in some guests and some people just to have chats about, and get on screen and talk about this. I know it's a popular format, and I think there's some lot of good stuff that will be there. Just last couple comments here. Um, yeah, so somebody's talking about what's the minimum recommended portfolio amount there as far as the using WaveTech, and the it really depends. I mean, it depends on your broker dealer. I know Interactive Brokers has fractional shares. Obviously, Robinhood has fractional shares. Charles Schwab claims they're going to have fractional shares here very soon, I think, in the next couple of months. And one of the things that we're working on is trying to figure out how to get things out of WaveTech, how to get things out of Portfolio Expert, and automate the trade so you can just click a button and put the trades in and go in, find out what you can allocate capital out of your account, and will know how to buy the percentages and things of that sort. When I get this thing automated to that level, then it's going to be very powerful, just like even looking at that portfolio I showed you a little bit ago when we were looking at the airline stocks, just setting up a trade. So it's very hard for you and I as humans to monitor too many items at once. And when we start to get spread out too thin, then it becomes impossible. Well, our software we have strategies that have 500 symbols in them. We don't have any problem. We can make decisions, how much to buy, when to buy and sell, and do a dynamic portfolio. And I've been teasing you folks for a while that we're going to bring out something that's called dynamic direct indexing. And I always tell folks, why would you use an index? Why would you use an SPY when you can make SPY better we actually have a portfolio that will dynamically trade all of the stocks within the S&P 500. And once you get to incremental shares and you can actually automate the transactions, there's no transaction costs. We can go in and model in a very sophisticated strategy and deliver it out to virtually anybody. I don't know when you get to 500 stocks, but you should be able to do it with very low dollar amounts. Maybe it'll take 20,000 to 50,000. We're going to stress test that at some stage. But the possibilities of going forward in the markets are amazing. There are very few things that I know when it comes to the market, but I do know this, is that the possibilities for the markets are huge. And I have a favorite line that I always throw out, is that investing used to be for someone, now it's for everyone. And these incremental shares are going to make it possible to do some very sophisticated quant type strategies and deliver them to anybody. And that's one of my goals and what I'm working on in the background to do. And to me, it's sort of like, it's the world of investing is going to change substantially. I believe there's going to be massive dislocations of how things are done going forward. in the next 3 to 5 years, it's going to be mind-boggling to a lot of folks on what's going to change, especially those in the advice world and the advisory world. There's going to be less of us. The baby boomers, guys like me, I turned 68 just shortly ago, and guys like me have driven the entire retirement industry, and that's not going to be a lot of you younger guys. Things are going to be done differently. Things are going to be much more dynamic, and things are going to be AI driven and tech driven. I may be an old guy, but I've been on top of this tech world for a very long time, and I grew up with it. And I have a vision which I will share with all of you in detail as we start to roll some of these ideas out, because it's about being able to have access to things that I never thought that an individual would ever have an opportunity to do. Yeah, and I know there are a lot of fintechs with portfolio bots, but you're going to see something incredibly different when we get this together. Yeah, so very very unique process that I've been fortunate enough to build, and we'll go through that at another time. But I appreciate everybody spending the time today. It's awesome. I know we've got folks. A lot of folks. We still have 319 people watching. If you don't mind, smash that like button. Keep the channel growing. Subscribe, and maybe hit the bell so you know when we come on. We do live streams every Wednesday like this, and ultimately we do one on Tuesday just for the product for WaveTech, and soon we're going to be bringing in portfolio expert and these strategies that I was just discussing. We're going to be rolling this out to the public, and I think it's just going to empower you folks like crazy levels. I've got emails from people just using WaveTech and how well they've done with their 401ks and running some of their own money. So that's what I always wanted. So thanks to YouTube. Unfortunately, thanks for COVID for opening up and me being able to and willing to actually open my world and our technology out to the public. It's been a wonderful, it was a great decision, I guess, when I decided to do it. And I didn't even decide to do it. It happened by accident. So anyway, folks, thank you so much for watching and spending the time with me today. And anyway, thanks again. I'm going to put up something on the screen here and continue to talk for a minute, but what we're going to if you haven't signed up at the end, sign up. It's about, I think it's right at a little bit more than $50 today to the end of the month. If you don't want to go forward, you can go on the subscription panel right in the software. You go, but this is the best place to start. And then there's training videos, there's weekly shows, both Zoom and simulcasts on YouTube, and things that we're doing to try to get this technology out so it empowers the investing public. So anyway, yeah, Jeffrey Wu, yep, we will see you tonight, and that'll be good. And Richard, thanks for joining, man. People are always asking me when I sleep, and I got to ask you, when do you sleep? Although it is daytime there now, or nighttime. So anyway, thanks again for showing up, everyone.